This is FinTech Insider News. This week, PensionBee warns that a quarter of Britons have no idea how much they have in their pensions. A coalition of banks and regulators are planning a standardised digital corporate identity, and the Saudi central bank lays out the next stage of its open banking framework. We discuss all of this and much more on today's show, so don't go anywhere.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Hello and welcome to episode 895 of FinTech Insider. I'm Kate Moody, Customer Strategy Director here at LMFS. I'm joined this week on FinTech Insider News by my co-host and a couple of awesome guests who are here to break down the biggest stories from the past week in FinTech and financial services. First up, I'm joined by my co-host and LMFS colleague, Dave Morris, who's the Global Head of Technology here at LMFS. Dave, always nice to hang out in real life, not in real life, on the podcast, etc. For people who've not come across in the podcast before, what should they know about your role at LMFS?
Yeah, I head up all of our technology. Quite busy at the moment because we're in up to the end of quarter, so lots of planning for our Foundry product for what we're doing in the next quarter, and lots of sort of work on partnerships in the identity space and the payment space. So yeah, really quite busy right now.
Cool. I'm guessing you have some perspectives on the stories we've got on the list for today then. Next, we have a very welcome return to the podcast for Britton, CEO of the Centre for Finance, Innovation and Technology, or CFIT, depending on whether how much you want to go for your acronyms. Welcome back to the show. As always, a pleasure to have you on. Can you tell our listeners a bit more about the work you're doing at CFIT, please?
Yeah, absolute pleasure to be back. And at CFIT, we're continuing with our mission to drive innovation in financial services by bringing together, coalescing, convening the financial services ecosystem to try to identify solutions, build out proof of concepts, and demonstrate how we can really overcome some big barriers to innovation in the UK fintech sector.
Awesome. Well, yeah, thanks once again for making the time and looking forward to picking your brains as we go through the stories today. We have a FinTech Insider debut for Becky O'Connor, Director of Public Affairs at PensionBee. Big welcome to the podcast, Becky. I'm guessing most of our listeners will probably have heard of PensionBee, but again, maybe just a quick reminder and what you do there specifically.
Thanks very much for having me. So I'm Director of Public Affairs. I talk about pensions, not fintech, a lot in the press on behalf of PensionBee, just trying to raise the profile of pensions really in the hope that people get the message and put more in.
Yeah, no, it sounds like a big challenge, and we're going to be talking about that as we jump into the news today, so looking forward to picking your brains. And last but certainly not least, we have another very welcome return to FinTech Insider for Chris Michael, co-founder and CEO at Ozone API. Welcome back to the show, Chris. What have you been up to at Ozone since we last caught up?
So yeah, I mean, we're continuing to do the two things that we focus on. One is rolling out our platform as a software as a service platform for banks and financial institutions around the world for open banking and open finance to help them both comply and compete in this challenging new world of open APIs, and also working with markets, sometimes regulators, central banks, sometimes markets initiatives to help develop standards, rules, frameworks, technology to support the ecosystem in certain parts of the world. So yeah, just doing more of that. It's getting more exciting. More markets are moving in this direction and in some very interesting ways. So great to be back too.
Yeah, absolutely. Spoiler alert for some of the things we're going to be talking about in the show this week as well. Well, brilliant. Thank you to all of you for joining us. Let's jump in. As always, a ton for us to cover. So on to our top story for this week. It's Pensions Awareness Week in the UK, but less than 15% of Brits know how much they have in pensions. That's according to research from PensionBee, who have found that 1 in 4 of us have no idea how much money is in the pot. And given that by the time you'll be listening to this, it will be Pension Awareness Day, it's pretty striking how many gaps there are in the public's pension knowledge. Almost half of Brits have not set a target for how much they want to save for retirement, while the average 50-year-old is over £100,000 short of what they need for a comfortable retirement. Lucky enough to be joined by Becky from PensionBee with some podcast. As you said in your intro, Becky, you spent a lot of time talking about pensions. I'm guessing maybe you weren't surprised by these findings, but I mean, should our listeners be surprised by them?
Well, pensions are one of those things that people don't like thinking about too much, which is fair enough. I mean, obviously, I think about them all the time. And so, it sort of seems a bit shocking to me. But really, if you had to break down the percentage of people's brains that's taken up by their pension, it would be like, 0.01 or something like that %, wouldn't it? If that. So, no, I'm not surprised. There's a huge issue, though, which is we need pensions. We're all going to need pensions if we want to give up work at some point. And that need isn't going away. In fact, it's increasing because one of the other things that we wanted to highlight is that more people now have housing costs when they retire, which means that we already have a shortfall issue, but that shortfall issue is just going to grow over time if people have very long-term mortgages or if they never actually get onto the housing ladder and they're renting forever, which is more of a possibility now. So we also, we have an annual statement once a year, and maybe we look at it, maybe we don't. We might open that email and might see, I don't need to know that yet. And, in truth, you don't need to be thinking about your pension all the time, but you do need to think about it just maybe a little bit more and at least have an idea of how much you have, how much you're likely to need based on what your own retirement circumstances are likely to be. And to maybe know if you're in the right kind of fund for you, because sometimes people aren't. Sometimes they're in a fund that's too low risk for their age, for instance, or maybe too high risk if you're just approaching retirement. And it's quite unusual now for people to use a financial advisor. So a lot of that has to come from ourselves and taking the time to read a little bit and find out for ourselves, whether we're in a good place or not and what we can do about it. And it can seem very scary as well, which is another reason I think people don't like thinking about it a huge amount. And perhaps this is why there is this lack of awareness, because it seems beyond us to manage it for ourselves. And obviously PensionBee exists to make it very easy. We're an online pension provider. We have an app. We do everything, in the whizziest way possible, really. And that is partly because we want to reduce that friction and that scariness for people, and make it easier for them to increase their contributions and feel confident.
Yeah, no, absolutely. It's a huge challenge. Dave, were you surprised by these numbers? I mean, obviously I don't want to make this like a personal confession or anything, but where would you sit yourself on that scale? What do you see in terms of the challenges in this space?
Yeah, I'm not surprised at all, to be honest. I'm probably at the latter end of things, being a little bit older. So, I'm very conscious about my pension personally, but I've got 20-year-old kids and they don't think about it. For them, there's so many other things at the top of the queue for their minds, which is, I've got my loan to pay back for my education. I need to get a house and things like that. It's interesting. We were doing some stuff earlier this week with a New Zealand bank and looking at the fact that they've shifted the dial a bit with the sort of government in New Zealand to talk about, actually, can I incentivize both the long term and the short term to try and get people to save much earlier with their sort of Kiwi Saver approach, where you can actually use it for both a pension or a deposit on your first house as a sort of route to getting people to put money in earlier, and incentivizing on that from quite a low amount of money going in, where the government will basically, I think they double if you put like the equivalent of $10 a week in, they put the equivalent in as a match to that and things like that. So that sort of different approach to incentivizing people is quite key. But I think certainly for the younger age, because compound interest works really well, doesn't it, when you start to add things up?
Yeah. As obviously you said in the intro to the show that you guys are focused on trying to support innovation within the fintech space. I know obviously we've got the likes of PensionBee that have come in, that have tried to disrupt, do things differently, but fundamentally this is still like a problem that hasn't been solved, right? That's still a long way from being solved. What are the main blockers that you see that are stopping new platforms or existing banks, pension providers from being able to make a real dent here and help customers in different ways?
It's really interesting, actually, because I spoke to the Wealth Tech Alliance about this, actually, and this is an area where they're very focused because obviously they're all looking at how do you manage wealth over the long term. And one thing that came out that conversation was the difficulty in even understanding where pensions are, right? There is no digital register of where all our pensions are in the UK. It's interesting hearing Dave's point. I mean, I've been in the startup entrepreneurship space for some time now, and pension is the last thing you think about because all you're worried about is equity, right? And you're putting that big play on getting a big payout. And if it doesn't happen, you're then in a very different position. But I was in the corporate world before then, so I'm only now really starting to think seriously about my pension. And I spoke to a pensions advisor, and we then had to go through this whole rigmarole trying to figure out where my pensions were, right? I've been in 2 banks, one in Switzerland, one in the UK, both of which no longer exist, Lehman Brothers and Credit Suisse. So where are my pensions? Trying to figure that out. I've been in a startup. I'm now doing this, that, and the other. It's a real challenge. And just even solving for that simple problem, being able to go, where are my pensions, right? And then having the ability to transfer them to the appropriate organization simply and easily, that would take us a long way forward. And I'm sure Becky's got some thoughts on what I just said. But personally, that's where I'd want to start.
Yeah. Becky, what do you reckon?
Well, look, the government has been working on pensions dashboards for what seems like forever. And, it's like a moving target. I feel like we're never quite going to get there. And they're looking at other solutions now, such as Pot for Life, which is where you would be able to choose your own pension provider. And each time you get a new pension from work or you move jobs, you can bring across the old pension into your personal pension pot for life. Or you can ask your employer to pay directly into your pension pot, which would just make life a lot easier. So there's lots of things that could be looked at, but sometimes I think it's fair to say there's like maybe a bit of intransigence from the industry because it would require a lot of change, and that, is often the thing that is it's a blocker, really, is the way things are done, kind of getting in the way of the way things could be, and resolving that issue of lost pension pots, because it can be, huge amounts of money that people end up missing out on. And often it's those pots that early in your career that you forget about because you've moved on, and they might have not been a huge amount at the time that you left that job, but then obviously by the time you're 60, 65, they would have added up into something quite substantial. And so I think a lot of people don't know what they're losing when they do lose track of those old pensions. And it should, of course, be much easier to gather them together as well. And we're doing a lot of work around transfers and sort of badgering the industry, I guess, to make the transfer process quicker and easier. In terms of being able to identify those old pension pots, though, the best solution would be something like Pot for Life, or a system where your old pension from an old job automatically moves to your new job. And it's all being discussed, but I think we're some way from it happening, unfortunately. And in the meantime, people do need to keep track of those details for themselves. And as you said, old employers change names. Sometimes they go bust. And so in that instance, if you don't have the name of the actual pension provider behind the pension, as well as the employer details, then you can lose track of them that way. There is a free government pension tracing service, which is really useful. But it's still, the onus is on us. And I think a lot of people don't really know that. They think there must be some magical way that, they'll be able to find it 20 years down the line. But unfortunately, it's not the case. You have to do the digging for yourself.
Yeah. Chris, keen to get your perspective. I'm sure, living in the world of APIs, right? You guys are used to connecting up different data sources. What is it? Do you have any insights into why the pensions network in particular is so disconnected, is still so disjointed?
I mean, it is. I can't think of a nice way of saying, but it is a complete mess at the moment. I think you've got three problems, right? You've got, that you've all highlighted. So you've got people not knowing where their pensions are, what pensions they've got, even, and I'm disappointed as well that the pension dashboard. I'm not sure the pension dashboard was ever a particularly good idea. I think it was, a half an idea to half solve a problem, and it still hasn't been launched. And that's a real shame that it's taken so long to not launch, and something that even if you launched it, it wouldn't solve all of the problems. So that's the first issue. Then you've got people being able to manage their pension. So where your pension is, and you want to manage it, and that's something I have a personal experience being very disappointed by. Again, like, you've got a pension, you find out where it is because you've forgotten about it for years, and then you find out, I too getting near retirement age. Not that I'm ever going to retire, but you want to find out, you want to look at your pension and try and manage it, and it's very disappointing when you found a pension that used to be worth X, and it's now worth half that because it's in a fund or being badly managed or whatever. And then you've got arguably a bigger problem, and the biggest problem is trying to encourage people in the first place to, particularly young people, to start thinking about that now. I think technology can help with all of these. It's not going to solve it on its own, but technology can help solve all of these problems. And I was always a big advocate of the concept of open pensions. Why not create the same construct? We've already got the technology, the framework. It already exists around the trust framework, around the API model, the security model, to enable people to have access to their money wherever it is, to be able to move it from one place to another. APIs and the open API sort of framework that we developed for open banking could be extended to do that. It's just disappointing that there didn't seem to be enough people who wanted to make that happen, and there wasn't enough government drive behind it. But I still think that's ultimately the answer, to try and encourage, mandate, whatever you need to do, create this open pension framework where you can have innovative providers like PensionBee, fintechs coming into the space offering services, and if pension providers can embrace that as well, then I think you've got something that can offer real value. And like I said, the technology, it's all there. It's not the technology that's the problem. It's people, invested interests, and other politics that stops all of this happening.
It's vested interest, Chris. The CM9 were not interested in doing open banking. They didn't want to do it at all. What's the benefit to them? They were forced to do it, the big banks. And I think, again, unless the big pension providers are forced to do it, they won't go down that route.
But I think that's where there are learnings in other markets now. I mean, only a fraction of my company, our businesses now in the UK, it's we operate in lots of different markets, and there are ways to get the established players incentivized. It's always a combination of a carrot and a stick. I think if you just have the carrot, you just have the stick, like arguably with the CMA9, like arguably what happens in Europe, you don't always get a good outcome. Certainly Europe is not a good outcome, but there are other ways to do that, and I think we're learning that all over the world now.
Okay, well, given the scale of the problem, I bet we could probably talk about this for the entire show. But sadly, we need to move on to our next story. That is businesses partnering with UK government to test corporate digital IDs. This is part of a new coalition bringing together business and technology heavyweights such as Amazon Web Services, Barclays and LexisNexis, with regulators such as the Financial Conduct Authority and Payment Systems Regulator. The project's aim is to tackle fraud by developing a standardised digital identity system that can be recognised across businesses. Lloyds, NatWest and Monzo will collaborate on a proof of concept for how this digital ID would work. A final report from the research findings is expected in March 2025. We are very lucky to be joined by Britton, CEO of CFIT, who can tell us more directly. Awesome. Ez, tell us more. What is it exactly about this that you think will change? What's this going to help support?
Well, it's a really good one. I think the most important thing is, for me, digital identity is something that's been talked about a lot in the past, and it's something you've really struggled to see progress. Right? And if we look at Labour's ambitions as part of the King's Speech and the manifesto, it was clearly a call out towards digital verification, but particularly focused on the consumer angle of things and how that could go forwards. And we've got the Digital Information Smart Data Bill now been pushed forward to be able to drive this. But there's been very little thought around what can happen in the corporate SME space and how can digital verification from that side of things help drive economic growth in the UK. And when we look at the prevalence of economic crime, fraud, I think it's like 1.2 billion has been the cost to consumers. One of the things we were really keen on exploring was, can digital identity, can a corporate or SME passport have a positive impact on this massive problem, whilst also enabling a whole series of other potential use cases and unlocking value for businesses in the UK. I think one of the reasons why I see digital identity as being so important is, and I'm sure Chris will have lots of thoughts about this, in particular when we think about API-driven systems, we think about a global real-time economic system. It's fascinating to me that we then rely on an onboarding mechanism that requires me to take a photograph of my passport and send it in to you, and then have that peer reviewed somewhere else. We've seen identity leveraged in various forms all over the world to great effect, right? And yet we still get stuck in this conversation around whether or not we should even have a mandated or a free market approach to a digital ID in the UK. And we get bogged down in this conversation around digital ID cards, national ID cards, when really the focus should be on how can a digital identity in a digital world help move us forwards as an industry. So yeah, ultimately what we're trying to do here is bring together some of the biggest players across the UK. We've got some like 96 organisations coming into this particular coalition. As you said, you named 3 of the organisations that are leading and a number of the other parties that are involved. And fundamentally, by bringing these organisations together, being able to get industry consensus on what a corporate digital identity actually should look like, what it comprises of. Chris talks about trust frameworks, what that could potentially be, and what are the key next steps to actually roll this out in the UK? What are the legislative barriers, the hurdles? What are the issues for industry to do this? And by having such a powerful, broad coalition of organisations, we're able to present a really concerted front, and we work closely with the regulators and governments alongside this. So really excited about what we could potentially deliver off the back of this coalition.
Yeah, no, absolutely. I think, as you say, there's a huge amount of potential here. Dave, obviously, as we talked about in the intro, like this is still relatively early stage. The organisations mentioned are going to pull together a proof of concept so we can actually understand more about how to actually work. But what problem would you most like to see something like this solve for businesses?
Ultimately, every conversation with any of my peers in the payment world is about fraud and ID at the moment. And without a digital identity, we're not going to fix the fraud problem, or even start on the path of fixing it. All of the things that we're seeing at the moment is sticky tape around the edges of it. So for me, it's fundamental, and actually getting the frameworks right. Starting on the corporate side, hopefully building trust that allow us to go to the consumer side of it will be a big step for me.
I think Dave gave a much better response than I did. I think he summarised it exactly right. Perfect answer.
Kudos to Dave. Chris, as thought you might have thoughts on this. Do you have thoughts?
Yeah, I mean, I totally agree with Dave, certainly, that, you're not going to solve this problem unless you start with digital identity. And this isn't just a problem. This isn't a problem you can solve just in one country either. You can make a start, but every country needs to take some ownership for solving this, so that when people have a bank account that can importantly receive money, the regulator in that country knows who the person or who the business is. And then you need to be able to make sure that transfers across borders as well. So it's a really good start to look at addressing that in one country, and other countries are looking at addressing it as well. I now actually live in the UAE, and I spend a lot of time traveling around lots of different parts of the world. And the UAE has got a strong digital identity, but even then, problems with a lot of fraud-related problems are where money is transferred out of the country. it's quite difficult to, whether you're well, let me put it this way: to have a business bank account in the UAE is not an easy thing. The amount of it's much more. There's much more KYC that goes on than I would have seen certainly in the UK. But it's easy to set up a business bank account in some other parts of the world and get someone to pay you. And international payments are fundamentally broken. They have been for a long time, and there's lots of solutions out there, but none of them really up and running and working at scale, I would suggest. I don't think it's too far away, but identity needs to be a part of that. So I think you need two things. You need to fix international payments, but first you need to do what you're starting at, looking at, is let's look at trying to fix it at least in one country. But yeah, it's a big challenge. Identity is a part of it, the most important part of it.
Yeah. And Becky, Dave obviously mentioned perhaps starting in the corporate space might build the trust that might start to allow conversations for similar IDs in the retail space. Is that kind of something that PensionBee has a perspective on? Like, would it make what you're trying to achieve, like your mission, easier if there were simpler ways for people to be verified digitally?
I mean, I don't know what our view is, but I certainly think that it would make things easier. And from that point of view, it would be welcomed by businesses like PensionBee, because we do, it's a huge process in conducting fraud checks, and everything, it takes time. Everything has to be done properly. And if there's a way of simplifying that process and making it more secure, that's obviously going to help businesses like PensionBee, but also help individuals too. And, the more we can do to sort of build trust in, what we do, but as an industry as a whole, then the better from the consumer point of view. So I think there's a lot in it for the consumer too.
Yeah, no, absolutely. And as obviously this is still early stages, you've got to build out the proof of concept. From your perspective, like what are the key questions that the proof of concept needs to address about how this is going to work? Like what are the kind of main kind of outstanding questions that you have about how this will come to market?
Yeah, and I think it comes back to what are the key barriers, why, hasn't this been implemented? And it's one of the big questions that we ask our coalition partners as well as we're going through this. What's been the issues? And one of our recent surveys, touched on legislative regulatory timelines, challenges with safe data sharing and trust, issues relating to access or data quality, the resistance to data sharing, and ultimately, where's the liability sit? These are all big things that come up. And as we look at the solutions, as we look at the proof of concept, really, you can summarize these things as a lack of a consistent agreed definition as to what is a corporate ID. So that's the number one thing that we want to put forward. There's a lack of a governing framework to promote trust and transparency. DCIT is actually working on a digital ID trust framework, but focused mainly on consumers. Now we need something similar that extends out to the corporate identity world, and ultimately better education and awareness. There's always going to be concerns and worries over safety and secure sharing of data. And ultimately, I see digital identity as just another use case of smart data. Our first coalition looked at open finance, and one of the big things that came out was in the importance and the challenge around giving appropriate consent to share data effectively, efficiently, and safely. And this is just another example of that. Digital ID is also a core enabler of these other use cases. But really, it is just, again, about how do we share data securely, safely? What's the mechanism for doing so?
Yeah. And one thing else is whenever we talk about corporate, one thing I'm always keen to understand is which types of businesses in particular are you going to target first? Obviously, there's such a huge spectrum of companies at different scales and different sizes. Like, where are you kind of focusing first? Or is this about trying to find something that can work for all types of businesses?
This is a really good question, and we are still early into the coalition. We're still trying to really nail that down, and we work closely, as you mentioned, some of the big corps, your Lloyds, your NatWests, but then we have the FSB as part of that, and we work very closely with the small businesses, whether it's fintechs and the like. I think as we look at that, it's going to be very much we'll have to start with the low-hanging fruits, who has the most information that we can actually gather, verify, and easily digitize and make available through this mechanism, and really try to identify what is the minimum set of standards that a financial services institution, for example, would require to onboard a new business and verify that this is a legitimate company, a legitimate need, legitimate trading standards, and legitimate need for a bank account. And then from there, we can then start to work up and down the stack. So, early days yet, but we will figure out balance as we go through this coalition.
Yeah, absolutely. Dave, we were talking in the previous story about banks needing incentives to make big changes. Are you more confident in this space that we'll see some of these big institutions like NatWest, like Lloyds, be a really kind of positive driver of change?
Oh, absolutely. Yeah, it costs them so much money, and whether that's on the fraud space, but actually just the amount of time and effort and money of managing this data to actually, reduce, it's an easy win for banks, reduce op costs. They will bite the hand off on this sort of thing for sure.
Awesome. Well, fingers crossed, as all really kind of looking forward to seeing what comes out the proof of concept, and have to get you back on the show to talk about it once we've got the next stage of rollout. On that note, we're just going to take a very quick pause here. We'll be back shortly.
Do you want to be part of something bigger? At Siemens, we use AI to transform the everyday. Our engineering solutions drive innovation and change. We're leading in technology and building a sustainable future. Join Siemens and make an impact to transform the everyday. Apply now and be part of something extraordinary. Visit siemens.co.in/careers.
Welcome back. Before we dive into the rest of the show, we want to tell you about our latest Insights episode. This time we're looking at the technology that could make fintech invisible, the connective tissue between finance and technology that could be poised to unlock truly next-generation experiences. For an extra techie podcast, we have an extra techie panel with Alone Affairs open banking experts joined by our leading expert in APIs. It's not one to miss and it's out now. It's the episode just below this one. Now, back to the news. Okay, our next story again has been taken from a couple of different sources, Finextra, The Guardian, and that is Singapore police could block suspected fraud transfers as UK regulator slashes maximum fraud reimbursement. New rules suggested by Singapore's Ministry of Home Affairs could allow police to order banks to stop transactions from suspected fraud victims. The draft scams bill is aimed at tackling rising rates of romance and impersonation scams, with restriction orders issued for when possible victims ignore warnings that they are being scammed. This all comes as governments around the world scramble to tackle the rise in digital financial fraud. The UK, meanwhile, is set to slash the maximum that fraud victims can be refunded from £415,000 to £85,000 as fraud complaints hit a 6-year high. Well, we're on a bit of a fraud theme now. Ez, what do you make of this? Should the police be intervening this way? Do you think the model that Singapore is taking will be rolled out elsewhere?
Look, it's a complex problem, isn't it? I think it depends where the liability sits. I think that's the issue. And I've had a number of conversations with banks and ironically crypto firms about scams. And it's one of the biggest issues on their mind. Again, this is why we chose the coalition and the focus that we chose. And one of the things they often say to me is, look, we are pretty confident that we know when a fraudulent payment is about to happen, but we can't stop people from actually doing it. And we will signpost it, we will tell them, do not do this, and they will do it anyway, right? And then after they've done it, they will then come back and ask us to refund them the cost. And then you've got those people, such as my friend's mum in her 80s, defrauded to the tune of about £50,000 by someone who called her up on the phone, said you're involved in some fraudulent transactions, you need to go and extract this money and leave it in a brown paper bag on your doorstep. And she did, right? To the point that they eventually got caught, they refunded her most of the money, and then she was found doing it again, right? My dad giving money to whiskey investors, right? Who then apparently went bust, right? So we see this type of behavior over and over again. So there's a piece around education, but also at some point, if businesses and banks are going to be liable for refunding, there has to be an ability to step in and go, stop, right? You should not do this. But there needs to be real strong governance and clear evidence to back that decision up, because what you don't want is banks stepping in and making a decision that you can't transfer money to XYZ just because, right? So I think it's a fine line, and it's the same with the police. But I think it's something that we clearly have to take very seriously. Economic crime is on the up. The digital economy is making it easier to do a lot of these things. But we don't want overreach, right? I certainly don't want the police snooping around my bank account and being able to decide who and when I can make payments to people, right? So, but if we're going to insist on organizations being liable, we have to give them the ability to be able to say no, right? So that's kind of where I am on it at the moment.
Yeah. Dave, what's your take?
Yeah, I think I agree. I think that at some point there is a point where you have to say no. But if you're not going to allow the banks to say no, I think you have to give them a get out of saying, we've told you, we've warned you, you're no longer actually within our framework to actually give you a refund on this, because you've not taken any advice from us. So if you go ahead, but it's at your risk. And because otherwise people will just keep doing the, you can sit there with the current framework with, where you can get those things back, where I could, if you get that email from the prince in Nigeria and you're paying it out on the faster payments network in the UK, spin the dice, because that 1 in a billion that it might be true, you'll get the big chunk of money. But every time that it isn't, just claim it back, because the liability is on the bank to give you the money back. So it's that far. It's too far now, I think, where it's gone to.
It is such a tricky one. Like, there are no right or wrong answers, but you can also look at it from the perspective of, like, it's been in banks' interests to remove some of the physical infrastructure where these types of scams would have been caught more easily. Like, I've heard so many stories from people that have worked in physical branches where they tell stories about the person behind the counter who spotted that someone was acting oddly, intervened, was able to kind of take that kind of step. And banks have benefited from the cost efficiencies of withdrawing from having physical branch networks. They've benefited from people having access to their finances from within their pocket, being able to kind of take out loans instantly, take on credit responsibilities more easily, etc. So I guess, banks are benefiting from this reduction of friction as well. So it's so tricky.
Can I just touch on that? It's
it.
really interesting that you mentioned that, because I know a number of banks are trying to introduce friction to the process. It's particularly to tackle this type of problem. And it's funny that we touch on this idea that a human being can determine whether someone's doing something that they've been coerced into. The example of my friend's mother, all of that money, that £50,000 she withdrew, she did it at a bank, right? She went in to the till and withdrew the money, and no one stopped her until they went, wait a second, you're an 80-year-old woman. You've asked for 15K, you've asked for another 50, now you're asking for more. Why? Now, what happened in the first point? Whereas if this was a digital transaction, I've got far more faith in the algorithms behind the scenes being able to go, you don't normally extract this much money, and you certainly have never paid this bank account before, right? What is going on, right? So I think it's something we've got to really take with a pinch of salt around that, the idea that a human being can stop this activity. I think it's a combination of what we require.
Yeah. No, I think that's true. Becky, what's your take? I mean, again, I think we've seen, especially with some of the changes in the pension space, right, with people being able to now withdraw their pensions in lump sums in ways that they weren't able to in the past. I think this is giving some of these older, potentially more vulnerable customers more of a target on their backs, right? They've got more funds that they have easier access to. Is that part of the problem?
With pensions, yeah, absolutely. I mean, they're sitting ducks for scammers, really, because they're huge amounts of money, often older people, and therefore more vulnerable. So it's something that the pension has been a huge issue for the pensions industry. And there's the Department for Work and Pensions introduced some anti-scam legislation, which involved the raising of flags for suspected fraudulent transactions. So providers can raise a red flag and block the transfer completely, or they can raise an amber flag, which pauses it for some time while it's further investigated. And on the whole, it has been really effective at reducing fraudulent transactions and scams in pensions. It's come with its own issues because it has also slowed down legitimate transfers, which is a whole other topic. But it's very, very tricky to know what to do when scammers will only become more clever and work around any restrictions that are put in place once they know that they're there. So it's, it feels like they're always one step ahead, really. In terms of, personal liability, I mean, and whether or not, human beings are better than algorithms, I really don't know. I'm sure there's instances where algorithms are better and instances where, a human being looking into someone's eyes is going to spot vulnerability, where an algorithm wouldn't necessarily pick it up. But I mean, either way, we're making an assessment on vulnerability and culpability, and these are very, very big, serious decisions to be making. And whether Singapore have got it right or not, it sounds, I don't know, maybe not from my point of view, but that we have to get it right, because these are huge sums of money, and economic crime is rarely understood as serious as it actually is, but it ruins people's lives, and directly or indirectly. So it is important that we find a process for each individual, provider and industry that gives the best protection, while also ideally not messing up processes too much, so that people still can make valid transfers, legitimate transfers when they need to, which is very, very difficult. I don't have the answers.
It's hard. Chris, I'll give you the final word. Have you got the answer?
Well, it's a complex problem and there is no one answer, but I think there are a number of things that need to be done in parallel to solve this. So you can't try and solve a complex problem with lots of different attack vectors and attack surfaces for fraud. You can't solve it with a single solution. It's a combination, I think, of education. I think that governments and financial institutions should do a better job of education. I don't think putting more screens in the way of customers when they're trying to make a payment is going to solve it at all. Fraudsters will find some other way. And that will end up just sort of frustrating customers. I think putting delays on certain payments can help, but what does the delay do? I mean, does it actually does it allow any institution to do any investigation and actually work out whether there's a fraud going on or not? I think one solution that I'm an advocate of personally, I'd be interested to see what everyone else thought, but and this would work within a jurisdiction within a country, and it could work if regulators agreed, is make the receiving bank liable. Don't make the sending bank liable, because that would then put an onus on banks who allow customers, whether it's a personal or business customer, put an onus on those banks to make sure they know who those customers are. And again, that doesn't work in all cases, but I think that we need to look at a number of different ways of trying to address this problem. And within a government, within a country, individual regulators need to work together, and we need to work cross-border as well on this.
Yeah, no, absolutely. Okay, well, yeah, as we all say, like, lots of problems that need fixing, and we'll be interested to see if these two initiatives make a make a dent. But on to our next story. We've taken this one from the papers, and that is Saudi central bank doubles down on open banking framework. The Saudi Arabian Monetary Authority, or SAMA, as some people call it, has issued a new set of guidance that would help standardise open banking in the region. The second release of guidelines focuses on streamlining digital payments and boosting cyber security. The open banking framework has been live since 2022, with these initiatives part of the Saudi Vision 2030 goals to position the kingdom as a global fintech and financial services hub. We're lucky to be joined on the panel today by Chris. Chris, you're an open banking expert and know a lot about Saudi fintech. I believe you're currently in Saudi. So yeah, on the ground as this is rolled out, how excited are you about these developments?
Very excited. I mean, I'm actually in Saudi at the moment because there's a fintech event on called 24 Fintech. I thought up until yesterday it was the biggest fintech event in the world because most other fintech events aren't actually fintech events. Fintech is a theme of a general sort of financial service event. This is a specific fintech event. It's not. There's a bigger one in India apparently, but GFF. But it's a huge event, and one of the key themes of the event was the launch of this second release of open banking standards and rules, which is focused around payments initiation. I mean, there are two predominant models that we've seen so far around open banking APIs and standards. One is account information, being able to get data out of a bank, obviously giving your consent to a regulated third party to access that data on your behalf. That powers a lot of use cases like personal finance management, alternative credit scoring. It unlocks a lot of value for customers. But what's arguably more valuable is payments initiation to enable more secure, more flexible payment methods to put the customer in control of making payments. And actually, some of the things we were talking about earlier, payments initiation APIs can help reduce a lot of the kind of fraud things that we were talking about earlier. So the key thing here is that it's taken 2 years before account information was published and has started to go live in the kingdom here. Now they've launched payments initiation. These things in parallel will enable a whole lot more use cases. So personal finance management applications, for example, can go from just showing you where your money is and giving you advice to actually helping you move your money with automated rules. Some of the use cases that are enabled in the standard in designed for e-commerce to enable payments initiation to offer a better alternative in many cases to cards or other payment schemes for e-commerce transactions, particularly online transactions. So you don't have to enter credit card details or store them in an e-commerce site. You can just make a payment from an e-commerce site using your bank account, using your face, your biometrics to make that payment. There are huge benefits around something in the UK we've heard called the variable recurring payments, which is a key part of the standard that SAMA have published now. So this enables all sorts of things like bill payments, subscription payments. You could use it for Uber, all sorts of other things, and removing or replacing cards and card-based payments. It's not right in every scenario, but it offers a huge amount of benefits because you can create these, as I say, better customer experiences, better security, and overall reduce the cost as well. The cost for merchants can be significantly reduced. The cost, not just merchant acquirer fees, but also reconciliation of where those payments have come from, because all of this data around the payments in the context of the payment can flow with the payment with the API as well. The Saudi standard is really impressive as well. It includes a number of things like request to pay, refunds, etc. So it's a really well thought through standard that I think when it goes live, which we still don't know the deadlines for that yet, but when it goes live, hopefully as soon as possible next year, what we'll see is a huge growth in number of fintechs offering these services. And what we'll see also is banks acting as fintechs or partnering with fintechs to offer these services as well. It's a very exciting market here in Saudi Arabia. There's lots of investment going into fintechs, lots of fintechs looking to come into the region, lots of homegrown fintech talent as well. And this isn't everything to do with fintech, but certainly adding payments initiation into the mix makes open banking much more useful, much more valuable for fintechs, but also much more valuable for end customers. And ultimately, that's what it's there for.
Yeah, no, I agree. Really, really exciting to see how it plays out. As I think we're sometimes a bit guilty in the UK, maybe in other markets as well, about sort of just focusing on our own fintech sector, our own fintech space. How much do you look at what's going on in Saudi? Obviously, the government has taken such a huge interest in the fintech space there, is really kind of trying to drive multiple initiatives forwards. Like, what's your take on the Saudi space?
Yeah, I mean, I think I agree with everything Chris said, and it's brilliant to hear about the progress that's being made. And I think the Saudis have reached out to us at CFIT as well. They've been very proactive in trying to get a sense of, what are other jurisdictions doing? What are other organizations doing? And they're not the only ones. You've had the Mexicans, you've had the Indians, you've had the Brazilians, all sorts coming over and trying to hear about what we're up to in the UK. So it's brilliant to see what is happening. And I think that level of progression and competition is also a brilliant thing for us, because it creates a real strong driver for us to, let's be honest, get a move on in the UK. We've had the Joe Garner Payments Review and the National Payments Vision in the UK, and let's get on with it. All right. So, and that's why we focus on open finance in the UK, because, Chris has just mentioned CVRP was one of the things that they focused on in that. And we're still bogged down in trying to agree how it should work in the UK, let alone all these other particular use cases. So I think it's great to see, really pleased. I think, progress is driven most by strong competition. So this is a really good wake-up call to the UK financial services sector to really get on with it, frankly.
Yeah. I guess, Dave, final word to you on this one. Do you think we are now reaching an age where there is almost competition within the open banking space? Different markets are coming out with different frameworks. Is there kind of a competitive edge to this? Who can do it the best?
Oh, for sure, because fintech is a global thing, and more fintechs are now reaching much broader. I think we got very complacent about open banking in the UK. It's stalled. It's not gone very far, and the look in that's coming in and going, look at what we're doing. They're not going to match what the UK are doing. They're coming to leapfrog where we are, and they'll go steps beyond. And the excitement of what you see in the fintech marketplaces, whether that's in Central America or Middle East, and is going to push them way beyond. You look at the open banking use cases in the UK, that it's the very bottom end, boring use cases still. We've not seen anything that's using the really exciting parts of what could be there in the frameworks up to today, and it's really just stalled. And hopefully that'll kickstart some people to actually really move it to where it needs to be.
Yeah. Well, watch this space. Okay, now time for a quick look at some more click-worthy news stories this week that we don't have time to cover in full. Our first story in this section was taken from City AM, and that is Zilch hits monthly operating profit ahead of planned listing. The payments and buy now, pay later fintech, which launched its first products back in 2020, has been on a steady upward trajectory with 4 customers and now a revenue run rate of over 100 million in July. Zilch was valued at £1.65 billion last year, and it says that the pace of its growth places it in the same bracket as Monzo, Revolut and Starling Bank. In keeping with the practice of most companies announcing their first profit, Zilch chose not to disclose the specific numbers. The company is tipped to list in 2025-26, and they are reportedly in talks with the London Stock Exchange, NASDAQ and the New York Stock Exchange. I do always feel Zilch is one of those fintechs that I really should be paying a ton more attention to. And obviously they feel quite aggrieved as well. So they've definitely been busy. So they got an investment from eBay's ventures arm last year, which saw them hitting that 1.65 billion valuation. And they secured a £100 million debt financing deal a few months ago in June, again, with this explicit aim of getting them ready to IPO. So hitting profitability was seen as the key thing that they need to nail before that. So I guess now it's interesting to see which market they choose. They have been very vocal about lobbying the London Stock Exchange, the UK government, FCA, etc., to kind of put some changes in place that they believe will make the UK a more attractive place for that IPO. I guess we shall see. There's quite a few IPOs that we're waiting, quite a few that we'll see where they choose to list. So this gets added to the list of ones to watch in that space.
Can I just add something on that? Because I think something that is not really talked about in this. I think it's brilliant. I know Ryan Mendy at Zilch really well, so it's just fantastic to see. Is the rate at which our top tier fintechs are hitting £100 million run rates in the UK is outstripping the US, right? The UK massively punches above its weight in terms of fintech. I mean, we are known to be second behind the US. I think that needs to change personally. And so it's brilliant to see these types of stories. Question will be, where will they IPO? I'm not going to comment on that, but fingers crossed, right? Sorry, I interrupted.
No, it's a cool point, and I agree. We should celebrate British businesses when they're hitting good landmarks. Dave, what have you got for us?
Yeah, this is some TechCrunch. So, new US fintech looks to shake up the real estate with controversial flat fee model. So, Landian, a startup which has just emerged from stealth, was born out of a series of major real estate lawsuits. Co-founder Josh Sitzer accused the industry of being anti-competitive and took the National Association of Realtors to court. The NAR are now paying out $418 million to homeowners, and the real estate market is seeing a significant shake-up because of that. The new Landian proposal allows customers to pay a flat fee upfront for home viewings and offer advice sessions, rather than the fees being added to a percentage based on after the fact. It's good to see this. To be honest, the property market, whether that's the US, the UK, needs a real shake-up. It's not moved it's so backwards in what it's done and its processes. I think the estate agents, the realtors in the US needed the kick here. They were making so much money, typically 3%, 4%, 5% on every transaction. Very few people have. If you look at the UK, the flat fee market hasn't really taken off. It's still very much controlled from the estate agents. Right through the home buying journey hasn't changed. So anything like this that starts to shake this up, I think, is a big win and something that we really need to see, happening in the UK as well. I would love to see it come over too.
Awesome. Okay. And finally, a look at something a little more lighthearted from the world of finance. Although I think this one's got a little bit of a serious edge to it as well, but we'll see. Let's try and make it fun. This story, again, has been covered in lots of different places, but we'll go with the New York Post, and that is TikTok creators target Chase Bank ATM glitch. A new trend emerged on TikTok where Chase Bank users filmed themselves using ATMs to exploit an infinite free money glitch. Users of the platform have filmed themselves withdrawing thousands of dollars from these faulty ATMs. So what's the catch? Well, it's absolutely a criminal offence and a textbook example of check fraud. And it gets worse for these TikTok chances as the bank has now closed the loophole and charged them for all of the money taken. One user posted they had been left with a $40,000 deduction from Chase. Becky, I mean, you're making sort of sympathetic noises. Like, are you feeling sorry for these people?
No, it's just my boys like TikTok and they love this sort of thing, and they lap it up. They'd be like, "Oh, did you hear about this cash point?" I could just see them going, to the nearest cash point and then doing it themselves. It's funny, but also, how are they going to pay that money back? How are they going to do it? They're going to end up in prison because they can't pay it back.
Yeah, well, we have to keep this one light, so let's assume that it all ends in a really jovial way.
I think my big question is, where did they get a checkbook from?
It's the US. Everyone's got a checkbook in the US.
Yeah, sadly still true. As have you ever? I mean, I'm guessing I can probably guess the answer. Have you ever been tempted to exploit a glitchy ATM? That must have been interesting. Add to your CV.
I think Ezechi, Britton, MBE has never been tempted to exploit a cash machine.
Yeah, no, fair. I think I accidentally knocked a packet of chewing gum into my bag once in a shop and didn't realise. And actually, when I left the shop, found it and returned to the shop to return it, and it was like 20p's worth of chewing gum, and I handed it back over the counter, and the woman behind the cashier's desk was just like, "What are you doing? Just keep it." But this is a slightly different level of crime. Dave, I'm not getting an instantly sympathetic vibe from your face, but I mean, for listeners who can't see your face, talk us through how you're feeling about this story.
The first thing that springs to mind is what a load of idiots. You were never getting away. ATMs are all they were recording themselves on video as well. Let's not even think about. I'm producing my own evidence and putting it out to the internet. And let's be honest, check fraud is a federal crime in the US. It's not just a small thing; it's a big thing over there. So it's not chances. It's idiots.
Yeah. Chris, have you seen the film Catch Me If You Can with like Leonardo DiCaprio? It feels like a slightly less glamorous version of that. Like, I don't know. What's your take?
Well, I don't know. I think it's quite amusing actually. I do think when brands get involved in things like that, there is an opportunity to engage with the audience. So, if they have an audience of people on TikTok who think that's funny, the brand could, and it's difficult to do, but I've seen examples where brands have engaged in a funny way with that sort of content and actually got some benefit out of it. And I don't know how you would do that in this example if you were Chase, but as a brand, your name is mentioned on a platform where you get a lot of traction with lots and lots of users. There's got to be a way that as a brand you can leverage that somehow.
Yeah, it's interesting, right? You're right. Like, I mean, I've no idea how much money was withdrawn in total, but if you compare that to like what Chase probably spends on the average marketing campaign, particularly to reach maybe like this kind of audience, if they'd come up with some sort of fun way to say like, maybe you return half the money, but you have to do X community service, or I guess it's the US, right? So like go sign up for the army or whatever it is that earns you like creds. But like, like as in you imagine there's probably a way around this, which might give them a slightly better brand story, but I don't know.
Return all the money and give it to charity. I don't know, but do something good. Do something good.
Okay, well, we've had lots of very serious chat in this show, so I'm going to end on a positive. That wraps up this week's FinTech Insider News. Thank you so much to today's guests. Where can people find out a bit more about you and your companies, what you're working on, Dave?
All over our content at 11fs.com, obviously, and on LinkedIn. You can find me there.
Brilliant. Ez?
Very easy to find, cfit.org.uk. You can find tons about what we're doing, or LinkedIn. Always easy to find either myself, the team, or the organisation.
Awesome. Becky, what about you?
We're pensionbee.com. We're also on Instagram. We are on TikTok. Not giving out free money on TikTok, but we are there. So yeah, you can follow us.
Chris, are you giving out free money anywhere or?
No, unfortunately not. But you can find us on ozoneapi.com or on LinkedIn as well.
Awesome. I'm also not giving out any free money. I don't have any. It's all being spent on nursery fees for my son. But you can find me on LinkedIn, Kate Moody, or drop me an email, kate@11fs.com. Thanks for listening. If you like what you've heard, please follow our podcast and don't forget to leave us a review. It helps us make a better show and helps others to find us. And if you're listening on Spotify, you can now drop us a comment and tell us what you thought of the show. As always, if you want to join the conversation, find us on social media. Just search for 11fs or FinTech Insider or email podcasts@11fs.com. We also now have a brand new WhatsApp community channel where you can get the inside track on all of our content. You can get involved via the link in the description below. Check it out. Thanks very much. Goodbye.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Cora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.